Assalamualaikum and good evening to Sir Ridhuan and all fellow friends. My name is Muhammad Nur Akbar bin Aziz, metric number 272740. We are from Group 9 and today we will present about banking industry, which is financial service sector. Okay, I will start with introduction. The banking sector will continue to be a significant source of funding for the domestic economy in the future, since the banking and financial sector will continue to diversify. To enable and promote the economic growth and transformation process, the development of the financial sector, particularly domestic banking institution, is essential. The banking and financial sector will play an important role in assisting the Malaysian economy to recover from the COVID-19 outbreak, and the industry will have its work cut out for it on the road to economic recovery. The aim of this research paper is to comprehend the industry market structure. In this research, we will learn more about banking and financial sector and the performance and impact on their performance during the pandemic period and post-pandemic. Based on this research, the market concentration of the banking and financial sector is displayed for the years 2017 to 2021 concentration ratio in our indices of market power and concentration ratio. The competitiveness and comparative advantage within the service provider firms will be explained. The next part of our research is the firm strategies behavior, which include research and development and merger. The firm's performance will analysis of the return on asset (ROA) and return on equity (ROE) will be discussed in the next part. The last part in our research is the public policy. Next is industry background. The Central Bank of Malaysia was founded in 1959 to maintain a strong ringgit, promote financial stability, and encourage the development of a good financial structure. It is responsible for the supervision and regulation of banking and related activities in Malaysia, as well as the development of a healthy financial system, as monetary policy is implemented through the financial market. The establishment of a sophisticated money market has resulted from the escalation of change in the financial service industry, which has been brought about by the nationwide expansion of the banking system. By the turn of the 21st century, the financial sector was rapidly expanding. The banking industry was carving out by niche by offering commercial and personal banking, internet banking, business banking, and consumer loans. Commercial banks, investment banks, and Islamic banks form the foundation of Malaysia's financial service sector. The sectors consist of 26 commercial banks, 11 investment banks, and 16 Islamic banks, 30 of which are locally held and 23 which are foreign owned. In terms of total asset and market capitalization, Maybanks, MB, Public Bank, RHB, and Hong Leong Bank are the largest of these banks. All of these banking institutions are required to get a license from Bank Negara Malaysia and are regularly evaluated and regulated by BNM based on the effectiveness of their risk management practice. There will also be brokerage firms, insurance companies, and money management corporations. To facilitate and improving the economic growth and transformation process, the development of the financial sector, particularly domestic banking institution, is essential. Due primarily to their significant market share, the strength of domestic banking institution is an essential component of financial stability that contribute the economic's long-term resilience. To support Malaysia's transformation toward a high value-added, high-income economy, the ability of the Malaysian financial system to deploy financial resources effectively and efficiently would be vital. As regional economy and financial integration increase, the banking sector's role in intermediating funds in the region and other growing economies will become increasingly prominent. Therefore, a more diverse, efficient, competitive, and stable financial sector is a precondition for Malaysia's economic transition. According to KPMG Malaysia, the Malaysian financial service sector has witnessed a considerable increase in mergers and acquisition activity in the Asia Pacific area. By the end of 2021, according to the head of advisory, Chan Chui Mei, Malaysia will have witnessed 31 declared transactions in the banking industry with a total of value 6.88 billion ringgit. She noted that since the pandemic, Malaysia's business landscape has seen major change as company research and optimize the company portfolios in search of development and recovery. KPMG in Malaysia observed an increase in merger and acquisition in 2021 as mentioned by Chan, while mergers and acquisition activity witnessed a modest down in 2020. They predicted that a steady return across all industry in 2021 due to a delay closings and increased investor confidence.
Assalamualaikum and hi everyone. My name is Muhammad Azmi bin Rashid. My number metric 270692. So I will continue with the structure part. The banking system comprises Bank Negara Malaysia, which is Central Bank of Malaysia, commercial bank, financing firms, merchant banks, Islamic banks, and a miscellaneous group including discount houses and foreign bank representative offices. Approximately 67% of the total asset of the financial system are held by the banking sector, making it the largest component of the financial system. Malaysia will have 56 financial institutions in 2021. There are 32 domestic banks, 24 foreign banks, 60 Islamic banks, of which 5 are foreign-owned and 11 domestic investment banks. Before conducting an analysis of market structure, it is necessary to first define the market in question. The market for deposit, loans, and securities are served by financial institutions, which are typically multi-product organizations. The goods and services provided by each bank on each market are not consistent with one another due to the fact that customers have varying tastes and that banks engage in a wide variety of activities and use a variety of input factors. As a direct consequence of this, the loan and deposit market are structurally differentiated in different ways, depending on whether the target market is individual customer or certain bank product. Both the retail banking and the corporate banking sub-market can be broken down further into customer segment, which is household and small and medium-sized firm. Different consumers have different preference in terms of how important it is to receive information, how much they fear taking risks, and how much they require liquidity. The process of segmentation produces loan sub-market such as mortgage loan, corporate loans, and consumer loan, as well as deposit sub-market, which vary depending on the type of bank product, which is demand time and saving deposit. These components define a market since they all share the same qualities: high level of liquidity, safety, and profitability, and they are highly interchangeable with one another. Deposit books and credit cards, for example, have many of the same physical properties with one another. The quality of their branch network, ATMs, and telebanking service, on the other hand, vary significantly amongst the three. The banking industry in Malaysia is projected to have a concentration ratio of 83.3% in 2020, up from 83% in 2015 and 82.9% in 2010. This number points to a highly concentrated oligopoly market. A banking sector is considered to be an oligopoly when just a small number of large banks control a significant portion of the total banking activity in the country. Oligopoly markets are characterized by a small number of companies operating within them, a high barrier to entry into the market, and some level of product differentiation among the goods and services on sale. Banks play the role of financial intermediaries by taking deposit from private households, then they're lending that money to individuals so they may get the enterprise off the ground. In exchange, banks charge borrower interest on the loans they make. Each bank will receive a smaller fraction of the overall share as a result of the increased number of banks that are vying for the same demand deposit. This will increase the likelihood that banks will be subject to a binding liquidity limit. This factor will have an effect on individual banks, causing them to cut back on their lending activities. This will have the effect of lowering welfare by lowering the total quantity of loan. As a result of the outbreak of the COVID-19 virus in Malaysia, the government took effort to restrict the activities of a variety of industrial sectors, including the banking industry. As a result, the banking industry experienced a substantial impact on its operation. After the country proceed into the recovery phase from COVID-19, several industries were able to restart normal operation, but their operations are still under control. Malaysian financial institutions have a high degree of capitalization as well as low level of non-performing loans, appropriate capital buffer and cheap lending costs. In addition, although Malaysia Bank did provide additional loan provision during the implementation of Movement Control Order MCO, such as issuing moratoriums or lending assistance to SME and retail customer, the full level of credit risk that is due to the pandemic has not yet emerged. This is because the pandemic has not yet reached its peak. As a result of this, the impact of the previous COVID-19 pandemic crisis suggests that any existing banking institution that wish to weather the volatility of the market and continue to develop through these new norms must look at and take proactive action in order to avoid the negative effect that will have a long-term impact. Additionally, banking operational strategy need to be more comprehensive and stringent, which necessitates the support of both internal staff and internal consultants that pose a variety of skill set. Next, competitiveness part. The encouragement of competitiveness is an essential part of every economy, as it enables more efficient use of the financial resources available to that economy and result in lower costs for the many stakeholders. Banks are believed to have undergone a transformation into a more resilient and competitive business over the course of the past decade. A significant amount of time having passed since the infamous Asian financial crisis. Operating on the available fact, the central bank presented a significant plan to restructure the banking system in the late 1990s, with the intentions of transforming it into a more competitive structure in order to enable local banks to compete with banks based in other countries. Because foreign capital and technology are major contributors to the economic development of this country, foreign banks play an essential role in its economy. In the 1970s, this nation was primarily an export of agricultural products and mineral. Today, its primary export are manufactured goods. When it comes to persuading the general public to support the concept of banking industry mergers and acquisition, competition has emerged as one of the most important aspects to emphasize since the proposed merger and consolidation is scheduled to be finalized in the year 2003. It was underlined in the Malaysian government's 7th plan for 1996 to 2000, which was prepared in 1996, that the country financial system needed to be substantially improved and moderned in order to provide new instruments of finance and encourage saving. As a result of increased globalization, it was anticipated that the operational environment in which the banking industry would function in the future would be more competitive and dynamic. Therefore, business intermediaries were urged to strengthen their competitiveness by increasing the efficiency of their operation and being more innovative in the development of financial products that were priced competitively. According to the bank annual report, commercial banks make up 77.25% of the banking industry. Malayan banking is expected to be the dominating player in terms of total asset value, $201 billion in 2021. Commercial banks such as Public Bank, CIMB, and RHB are also significant players in the market today. The primary function of the commercial banks are the solicitation of saving in terms of form of deposit and the supply of financial assistance in the form of loans. In recent years, commercial banks have been engaged in competitive activity with the goal of increasing their market share by increasing the quality of the service and facilities they offer. These activities include increasing the number of ATMs, providing attractive promotion, offering electronic banking service, and broadening the range of banking services that are available. The market has been controlled by regional banking institutions. On the other hand, 10% of the entire asset of the banking system are contributed by international financial institutions that have local branches, while only 3.5% of the total liabilities of the banking system are derived from international funding account. The majority of Malaysia financial institutions have branches in the nation's capital as well as in other major cities. The goal of the branches of international bank is to provide service to multinational firms that have established themselves as trustworthy, as well as organizations that are the same country. There is possibility that Multi-Sushita Malaysia Berhad will choose to conduct business with Japanese financial institutions like the Bank of Tokyo Mitsubishi UFJ Malaysia Berhad, Mizuho Bank Berhad, or the Sumitomo Mitsui Banking Corporation Malaysia Berhad. As a result, these international banks are in a position to take market share away from their international counterpart. Despite this, the majority of the banking companies are still maintained by domestic banks. As was discussed before in the part that came before this one, this can be seen by looking at the size and magnitude of the bank. That's all from me. I will pass to the next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. My name is Haris bin Zaini, nama matrix 269557, and I will present the conduct of banking industry in Malaysia. Based on the CR4, the dominating banks were RHB Bank, CIMB Bank Berhad, Public Bank and Maybank in 2010, 2015 and 2020 respectively. In other words, they have the enormous capacity to modify price, output or trade condition without effective restriction from competitors. Advertising may be used to convey efficiency and product or service quality, or if advertising can indicate quality, then low-cost enterprise can differentiate themselves by promoting vigorously something high-cost produce cannot afford to do. Then, banks may expand their advertising spending to attract new clients in order to enhance their profitability, most likely at the cost of competitors. On the other hand, advertising economics of scale may assist in the development of entry barriers. The incumbents may prevent entrants by boosting their advertising effort further, forcing the entrant to spend much higher sunk advertising costs in addition to the original capital investment outlay. The pricing policy is critical to prevent offering product or services that cannot sustain lucrative market price. Banks can expand or protect their market share through this pricing policy or strategy and raise or defend their profits. Pricing strategy must be based on the demand indicated through a market mechanism rather than the cost of producing the product or corresponding services. The price policy must be flexible, with special consideration given to the market segmentation variable and the product life cycle. It is because marketing examines the market primarily from the client point of view. As a result, the client perspective of the pricing is more important than the amount of the development expenditure or the profit that will be realized. Apart from that, the competition's price may impact any bank pricing strategy. Client will compare commodities from several companies to determine the price. Any business must be aware of the pricing and quality of competitors' item to set their price. When similar service of similar quality and value are supplied, the pricing must be comparable to that of the relevant rival, or the company may risk losing their sales and profits. Next, for industry strategic behavior, which is a merger of bank industry. A merger is defined as the combination of two or more companies in which the acquiring firm absorbs the asset and liability of the selling firm. To obtain control of another company, a company will buy the majority of all of its shares. Mergers in the banking industry are significant to shareholder and interest group in the industry or bank company. The importance of this merger is to reduce non-price competition, resulting in waste of resources, duplication, and higher costs. On the other hand, increasing the customer base can lead to the higher utilization rates, increased marginal labor productivity, increased yields, and reduced administrative costs by consolidating services in the industry. Table above show the bank merger of each Malaysian anchor bank based on CR4. This merger can also be witnessed in the banking industry, where certain corporations sell their shares to maintain operating efficiency and productivity. However, some financial organizations refuse to merge to prevent their earnings from decreasing. According to the Harta Lega Holding Berhad from Bursa Saham Malaysia, has announced that Maybank Banking Berhad is always open to evaluating potential value creation opportunities that can benefit stakeholders. However, there is no potential plan to be announced. Industry-wide merger may allow companies to attain economies of scale, stable industry, and protect consumer and banks that can improve their ability to compete domestically and internationally. Banking merger can be expanded across the entire region as corporate organizations such as Maybank, CIMB Bank and Public Bank have done. As a result, effort to create mergers should consider the financial industry ability to compete in the face of global challenges. That's all from me. I will pass to the next presenter.
Hi, my name is Magdalene. My tree number is 270248. So now I would like to continue on the topic performance. In this section, we will discuss about the total sales, return on asset and return on equity for every company in bank sectors. If the company have higher sales, which means that the company is more prosperous than others company. Besides, every company should have high in their return on assets. This is because return on assets shows how efficient a company in managing their assets. On the other hand, return on equity will show how well a company management on deploy their shareholder capitals. So now I would like to enter the first subtopic, which is the sales. First, according to the table, we can see that the Malayan Bank has the highest sales from year 2017 to year 2021. Malayan Bank had increased a marginal 2.1% from 44.66 billion in year 2016 to 45.58 billion in year 2017. Malayan Bank has the strong revenue from their business sector and also the key overseas markets, as well as significantly lower impairment losses and a better asset and liability management. All this had helped Maybank to reach record earnings. However, we can see that in year 2020, Maybank revenue had dropped from 52.86 billion to 51.03 billion. This is due to the higher net impairment losses because of the continued impact from the COVID-19 pandemic. According to Statista, Maybank operating revenue was around 51 billion ringgit at the end of fiscal year 2020. Therefore, we can say that Maybank is the most valuable bank brand in Malaysia, as well as the company's largest publicly traded enterprise. Based on the table above, it can be said that Public Bank is the second highest in revenue among all of the bank sectors, while the third highest goes to CIMB Bank. On the other hand, based on the table above, Alliance Bank recorded the lowest sales in the consecutive 5 years from 2017 to 2021 in the bank sectors. According to New Straits Times, the Alliance Bank is prompting an upgrade in financial year of 2022 to 2023 2024 earnings per share forecast. That's all from me. Now I'll pass to the next presenter. Thank you so much.
Everyone, my name is Ki Yongshen, entry number 272137, and now I'm going to present about the return on assets and return on equity for the Malaysian banking sectors. So return on asset is a financial statistic that shows how profitable a business is in comparison to its total assets. So a higher return on assets implies that the corporation is more effective and productive in managing its balance sheets to generate profits, while a lower return on assets suggests that there is still space for improvement. So based on this table, we can see that the Malayan bank has the highest return on asset in all the 5 years period. So according to a press release on February 2021 by the Malayan Bank, it stated that the Malayan Bank is the Southeast Asia fourth largest bank by asset, which their profit before tax is rising to 25.8% year to year. And the net profits also increasing 24.9% during 31 December 2021. So by reading to this article, we can know that the Malayan bank had used their assets very well to generate the large amount of income. So the stable revenue and net income also played a big role in generating a very high return on asset for Malayan bank in these 5 years. So now for the lowest return on asset in these 5 years for the Malaysia banking sectors is Hong Leong Bank. So although it has an increasing number in sales, but their profit amount still considered low as we compare it to the Malayan Bank. Although its return on asset decreased during year 2019 and 2020, but it's now back to the trend to increase. So their net profit after tax are increasing in year 2021, which increased 18.2% year to year. So if it's managed to maintain this trend, their return assets surely will increase in the future. So now for return on equity, so it is a financial performance and indicator that is computed by dividing net income by shareholders equity. So the return on equity is a measure of a company's profitability and efficiency in generating profits. So based on this table, so we can see that the Malayan Bank has the highest average return on equity in these 5 years. So this means that their company are very efficient in generating the profits. As we said earlier, the Malayan Bank has a massive amount of net income and it is still increasing in year. So the big amount of revenue and net income is the main reason why the return on equity and return on assets is the top in Malaysia banking sector. While now for the lowest average return on equity in these 5 years in the Malaysian banking sector is Affin Bank. So Affin Bank is considered the least efficient and in generating profits in the Malaysia banking sectors. This is because the Affin Bank debt is increasing from year 2017 to year 2021. So the amount of debt is increased from 3.4 billion ringgit to in year 2017 to 4.4 billion in year 2021. So we can say that the big amount of the debt is the reason that caused Affin Bank return on equity is the lowest in the Malaysian banking sector. So that's all from me. I'll pass the mic to the next presenter. Thank you.
Assalamualaikum. My name is Wan Ari Ashra. I will continue about government policy. Why do it exist? First, to confirm that a market or industry is developing without being misused by powerful company. Second, both the targeted sector and other industry connected, it will be impaired. Third, it is essential to maintain competitiveness since it might result in greater advantage. Then, to stop big business from abusing their market dominance and ruining the competitive environment. For the environmental quality, first, a law that aims to control pollution, so fulfilling the goal of environmental protection. Then, due to the likely that the pollution may spiral out of control, such an act is required. As a result, it can be claimed that the sector growth of industrial service is being impaired. For the national policy on industry, a strategy that encourages the industry to depend more on technology when boosting productivity rather than capital and labor. Then, by 2025, it is anticipated that this sector contribute to Malaysia's economy will rise to 392 billion ringgit Malaysia, along with a 30% increase in productivity. The government aims to boost the percentage of skilled labor employed in industry from 80 to 35%. The expansion of the manufacturing sector under government endeavour would likely result in a rise in demand for the goods and service, which will provide the industrial service sector a boost. For the third industry master plan, first, to focus on reshaping and developing the manufacturing and service sector in a coordinated way in order to advance industrialization to a greater degree of global competitiveness. Then, by 2020, the goal is to contribute a total of RM 189 billion by concentrating on research and development (R&D), forging forward in new growth sector, improving total factor productivity (TFP), and so on.
In conclusion, based on the performance of research, we can see that Malayan Bank had the highest sales from 2017 to 2021. Malayan Bank sales in 2017 are 45.58 billion, an increase to 52.868 billion in 2019. By 2020 and 21, total sales of Malayan Bank decreased abruptly due to the COVID-19 factor. Most banks in the country have excellent return on asset and return on equity. The bank that tops the chart is Malayan Bank for return on asset and return on equity. All banks in Malaysia are experiencing a decline in return on asset and return on equity in 2020 and 2021 due to COVID-19 transmission in the country. Each bank is experiencing an expansion pace. Due to its good performance and expansion, Malaysia's financial market has continued to draw consistent foreign direct investment. Global investors and financial players are more confident to invest in and secure partnership in the nation's expanding market and business initiative as a result of the banking industries and financial sector's faster rate of expansion. Malaysia is able to set new standards for the financial sector in the future due to the country's consistent market and banking sector expansion. In preparation for the financial world of tomorrow, it was anticipated to deliver Malaysia banking sector constant advance and previously unheard of expansion. This key market gave the banking sector an essential instrument for catching up to other emerging industry and Southeast Asia financial superpower in chasing the postmodern world new development pace. That's all. Thank you.